So for more on finance, Rod North joins you now from Bourse Communications. Rod, good morning.
Good morning.
Now, interesting week of economic data you've been looking at and some more figures to come. Take us through what we know so far.
Yes, well, I mean, we've seen the week begin with the job ads data, which was showing that the ads were down. That was then followed by business confidence, which was well up. And in fact, the figures for business confidence really showed that business confidence was back to where it was, in late 2007 and 2008. So that was a good indicator. And then yesterday we got the consumer confidence figures, which showed a decrease of 2.5%, which was the first time it had come down for 5 consecutive months where it had gone up. And that was interesting because obviously that reflects, I think, consumers' feeling and response since we've seen the two interest rate increases by the Reserve Bank in October and, of course, in November.
And so, but there are a few commentators out there still arguing that the RBA did move too early.
Yes, I think there's still a feeling about that, Joe, because it's really looking at this data, and I think this week sort of indicated that it can still be quite mixed. And of course, one of the things that can change quite quickly is consumer confidence can change, and we've seen that. With 2 increases and consumer confidence down, it would be expected that if the Reserve Bank then continues to move rates up, it would be unlikely that we'd see consumer confidence go back up. It's obviously got to come down. So that's going to be a measure that the Reserve Bank's going to have to watch very closely.
I'm finding it very hard to really get a handle on just where and how stable and strong the economy is or isn't at the moment, with all these sort of contrary and mixed indications. What to you is the strongest indicator that you can grab onto to actually try and take the temperature of the Australian economy right now?
Well, I guess one of the key things is going to be where we go on unemployment. And with the jobs data coming out today, there is an expectation that rate will move back up from 5.7 to 5.8%, which means for October, 10,000 jobs have been lost.
But that's going to be a lag indicator anyway, isn't it?
It is a lag indicator, but the interesting thing about that is, and of course we all know that the government's revised its forecast there from 8.5% back to 6.75, but we've still got a way to go from around 5.7, 5.8 up to 6.75. The interesting thing about that is that in history in Australia, no Reserve Bank has really put rates up when unemployment is still a rising indicator. And yes, it is a lag effect. And one of the, I suppose, positive indicators that we're really seeing significant business confidence out there. And I mean, that is one of the probably key indicators that we look at, because that's going to be a significant driver for business, for employment going forward. And we're probably not going to see that really kick in until sort of into the first half of 2010. So that would be one of the key things I'd be looking for. But things like inflation, I mean, we really haven't seen any significant signs of that, coming, into the cycle at this particular point in time. But obviously the Reserve Bank is watching that very closely.
And there are some analysts out there now predicting that rates aren't really going to rise much next year. There'll be a rise next month and maybe early next year, but not too much.
Well, it gets back to, the definition of what sort of setting. I mean, we've been in an emergency setting with the lowest rates for 49 years until the Reserve Bank changed that with the 2 rate increases. It's likely that rates will end up somewhere between sort of 4.5% to 5.5% in 2010, so in about a year from now. So that would, represent an increase of sort of 1 to 1.5% from where we are, with a cash rate at the moment of 3.5%. But that's still going to create some concern for people, particularly those with mortgages that perhaps have overgeared.
The Goldilocks setting.
The Goldilocks setting, that's right.
Everything should be just right, I think. And just quickly, what do you expect might happen on the market today?
Well, I think the market's probably going to be up a little bit today. I mean, off the back of, more favourable Wall Street. So we're in for quite a good day, I would have thought.
Good to see you, Rod North. Thanks so much.
Thanks very much.